The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 255, NASDAQ up 101, S&P's up 30. Gold's down $14.90, trading at $15.08 an ounce. We have silver down 19 cents, $16.93 an ounce. Light sweet crude up 81, $55.70 a barrel. Notes and bonds. You get the 10-year down 16, 30-year off a point and a half, 130.13 on the 10, 164.03 on the 30. Bottom line, both of them went to higher price last week, folks. Had the volume behind it. You had the 30-year finish its ABC structure on the way up. 10-year, 133 and change is the number. We got to 131. I expect you're going to be right back topside. King dollar up 93 ticks, trading 98.100. That's weak in a big way. It did stay over its higher range. That's the 97.715 area. We'll see where that shakes out, but it certainly is not getting any juice out here today. The euro is at 110, the yen is at 106 and a quarter, and the pound is out here at 121 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We get a bounce going out here in the marketplace. Friday, you started at a price point with a SPY of 284. You get to 289. You're coming right into basically ICE. ICE lays out about 294. Right now, you've got to 292.46. Bottom line is that if we go from the highs, let's go from the highs of July 26. So highs at July 26. 302.23. We had an ABC structure on the way up, 303. Price projection, missed it by 75 cents. You come off that high, monster volume off the high. Your first volume characteristic is 142 million. Next one out here at 116 million. We go all the way to the low, you get 178. We come up and tested this area of 294 twice. First time we tested it was on the 8th, and we did 87 million. Second time, we tested it with 94 million. That was on the 13th. Now what you have here is it looks like this test is going to be out here today of the 292.46. And we hit 292.46, which is pretty wild, man. It's pretty hard to even comprehend when you are dealing with large numbers like this, how this works. But the bottom line is that what we did do is that we got over the highs of last Wednesday. Right now, you're underneath them, and we're not going to do 135 million shares. Bottom line, Friday, you did 85. So that's one of your benchmarks out here today. NDX 100, we take a look at the NDX, set up the same way. NDX right now got to a price point of 188.70 out here today. You're at 187.96. You're coming into the same area. You're coming into the area where we had 40 million shares traded, and right now you're at 4.9 million. And bottom line is that you get some resistance right at that level. Small caps out here, IWM, those are the weakest indices. This is the weakest indice, rather. Up $1.50, you get 2.9 million. You're going into 21 million. And of course, what the small caps did do, the small caps broke its low of May 31st. That was the first major indice to break its low, and I expect you're going to be right back down into those lower levels. Oil, let's go take a look at the oil contract out here. So oil, you've had some $1.50, $2 moves just about every day in the oil market. Right now you're up 81 cents. You're trading at a price point of 55.69, and that's anemic volume also. You're coming into each and every time it's actually at the $60 level where this thing has been giving it up. We'll see whether this can even hang over 55.67 today. 55.67 was the CL. Let me just look at something. 55.67 was the high that was generated out here. Yeah, so we're still on the September contract. So 55.67 was the high that was generated out here on Friday. That was anemic volume, and it doesn't look to me that's even going to hold that number. So that's a big number. King dollar. What do we get with King dollar? King dollar held price last week. Anemic volume, your bottom line is that you're over that 97,715. Not much traction here, though, at all. So we'll see how good old King Dollar is going to react this coming week. What we do have out here, and this is where it's going to get really interesting, folks. My take is that, yeah, this thing's going south. What's going to get intriguing is that Powell is going to speak Friday at Jackson Hole. And the real question is going to be there. The market is still looking, no doubt, for a quarter-point rate hike at the September 17th and 18th meeting. That's an 82% probability of that. There's an 18% probability that they will do a half-a-point rate cut. The market is going to be looking for, does he open that door to a half-a-point rate cut? My take is that he's not going to do that. That's the September meeting. October meeting, we're already at 68%. For a rate cut at the October meeting. So that number, both the number of the September 18th meeting as well as the October 30th meeting went up dramatically the last couple of days. So 82% for quarter point in September, 68% for another quarter point in October. That would bring the short-term bank-to-bank discount rate down to 1.5 to 1.7. So you're talking about some numbers. Notes, bonds, the 10-year, 30-year went to all-time lows. The 10-year, when you take a look at this 10-year to me is saying it's going to blow away the all-time low of 1.31%. We made it down to 1.47 last week. And this market can't hold this. In fact, even today, this 10-year, if you just stay on this 10-year, you very well may get a rejection of lower price in this 10-year out here today. That's the way this seems to be shaking out. We're at 130.14, and all it's doing is coming down to where it has some very powerful strength. You've done 753,000 contracts. That is very light contract volume as you're pulling back. Some of the higher volume equities out here, of course, this is 45 minutes into the marketplace, so I don't expect you to get any volume, but you got GE down 8 cents. PG&E, look at this, man. This one blows my mind because, listen, this one's going bankrupt. And it's amazing watching how long it takes and how this shakes out. So if we pull up PG&E, what you're going to see is that when they had the fires, stock goes from $71 in September of 2017, goes all the way down to $5.07 in January of 2019. Bounces all the way up to $25. So picture this. You're talking about 400% bounce. Bottom line, where are you now? You're at 1032. You're barreling into, next stop here is 507. This thing came down today, $4, and what it's all about is, they get, let's see. So PG plunged Monday after a judge ruled that the jury can determine whether it should pay as much as $18 billion in damages to wildfire victims. The California utility giant fell 28%. Bottom line, folks, is that they don't have the money to pay this thing off. What I suspect is going to happen here, it's going to be a start over. That's how this gets. The legislation in California, you're going to have to do something to protect, of course, the electricity coming out in the next bout. But guess what? They're going to bury the debt. See you later. Start again. Company will be there. Start again and roll it up. Dow Industrial's up 206. NASDAQ up 80. S&P's up 25. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up about 222. Nasdaq is up 86. S&P's up 27. Let's get over to a couple of these pot stocks. So they finally got back into the lower end of their consolidation. If we look at Canopy Growth, the low for the year is 25.26. The high is 59.25. And what you're going to see out here is that they come out with numbers last week, bad numbers, bottom line, blew away a B point. And if we take this, let's look at this here. Put it on a weekly. Oh, it's a tough one on a weekly. Okay, so it's like, no. Yeah, it's an ABC down. Okay, let me look at this thing. 40, 30. Okay, that's 24. Cool. Okay, so it's an ABC down to 24. And if we bring this on a monthly, what you're going to see is your bottom of this consolidation is 25. So that's pretty cool because most times what you're actually going to see here, it's not going to just be that exact. It'll be too easy. Yeah, so bottom line is that you're getting back into this lower level. Volume's lighting up. We'll see how this baby reacts. So that's Canopy. Let's go take a look at a couple others. Aurora, let me see this. Aurora, ACB. So that's same setup. This is down from $10. You're in the last 5 months. You're at 583 right now. That still has lower to go. 450, somewhere around 450. And Tilray's a whole different animal, man. This I can't even imagine the amount of bread that was lost on this stock. So Tilray. This is getting slammed out here today. It's down $2, trading $29.33. Let me see this. This is an ABC down. Okay, let's look at this. So this is an equity. This is the equity that traded to $300 last September. Started out the month at 114. No, 123. No. Let's see, where did you start? Started at 117, went up to 300, and closed at 123. This baby's at $29 right now. Make it, look at, that's I got a feeling this is. Yeah, it's never traded at $29. Oh no, yes it has. $20. $20 going back to July of 2018. So what we're going to see there. Let's see, Elfria. Let me pull up a couple more. We're getting a much better understanding of where these things want to trade. Not necessarily trade. I think we've always understood where they want to trade. It's what are these really valued at? You know, and my take is that these are going to be valued really at a commodity equity. So you get Elfria. Oh, this is a nice little setup. Okay, so this came out with numbers. It popped. So first off, it's down from $10.07. Popped last couple weeks ago. Almost filled the gap. Didn't fill the gap yet. I'd wait for this to fill the gap, that's for sure. Oh, look at this. Has a high volume low. Ooh, that's dangerous. So this has a high volume low in December of 2018. I'd wait for that. Yeah, these things have, I suspect, just a little bit longer to go on this pullback, and then we'll get basically an understanding, I think, where they actually may trade, because they all seem to be in a very large consolidation, folks. That's how this baby is shaking out. 877-927-6648. We get over and we take a look at the XAU, the HUI, what has happened inside the gold as well as the silvers out here this morning, folks, that they've already rejected lower price. So it's pretty impressive that when you have the market up as dramatically as we do 2 days in a row, guess what? You can't whack these things down. The XAU today, which I expected we were going to do, is come down and test the lows of last Tuesday. You know, the lows of last Tuesday, that was a wild day in the marketplace. XAU went from 96.10 down to 96.50, and that still had lighter volume. It was going into a breakout area. Bottom line is that we're down. We already tested that area. We got to 92.82. Then we get to 90.61, rejected it. Right now you're at 92.38. And I suspect the gold bugs index did the same thing. Didn't quite make it. The gold bugs index got to 207.60, and 207.40 was the number. Same setup, though. Pretty impressive. If you go take a look at Barrick Gold, this baby continues to press highs with volume. Barrick is at 1822, has sitting there with couple high volume highs, and you know they couldn't get this down at all, which is pretty impressive. In fact, let me go see, because the 13Fs are out right now, and let's see if anyone. I'm really looking for Fidelity to start accumulating this thing, because the reason I'm saying that, folks, is that the Fidelity always was a big supporter of Rango Resources. Let's see. So no, they're not in here. FL. So this is interesting. Look at this. We'll see who this is. This is Boston Partners. Look at this. Okay, so, you know, depending on how long you've been listening to me, right? What happens is that, this is wild, man. So, Fidelity, State Street, Mass Mutual, they're basic in Wellington. They're all within the same block of each other. Now, Boston Partners is in 1 Beacon Street. They're a couple blocks away, but this is a new player here. I got to look at this. This person came in, this fund came in big. This is a new buy. They came in with 36 million shares. They own 2% of Barrick Gold right now, and they put it in every portfolio. That's pretty, and that's a Boston company. So I didn't find Fidelity, but guess what? We found that. Let's see what else we got. Let me see who's selling it. First Eagle, they sold half their position. Renaissance Technology sold half their position. Okay, let me look at, I want to go to Anico Eagle also. We'll take a look at this. Well, so at Anico Eagle, let me see this. Oh, I see what's going on. You know what's going on? No, Fidelity is in this. Let me go back. Sorry, folks. Let me go back to this. Fidelity is in it. You know what they did? instead of Fidelity now, I see what's going on. They got a new symbol. I love it. Yeah, so Fidelity's buying. Okay, so here we are. 17 million new shares. They got 50 million right now. Yep. FIL. That's how they. This is interesting. they used to get it. You have to just bring it down a little. Hey, that's good news. Let's go to John in Philly. Hey, John, what's going on, brother?
Well, good morning, Tom. Thanks for taking the call.
Thank you, man. How you been?
I've been excellent. Been loving the past 3 weeks of wild whipsawing in the stock index futures, and I have a question for you on that very subject, please.
Cool. Just stay right there.
You've documented how the. Oops.
Just give me 1 second. Stay right there, John. We'll come right back. All right.
Very good.
Awesome, man. 877-927-6648. Dow's up 220, Nasdaq's up 90, S&P's up 28. We're going to come right back with our man John from Philly, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 222, Nasdaq up 91, S&Ps are up 27. We're talking to man John from Philly. We're going to be talking about the E-minis. Okay, brother, talk to me.
Okay, Tommy. Here's the idea, and then the question for you, please. The S&P made a intraday and closing high July 26, and then 6 trading days down hard, just an abrupt.
Yeah.
as Basil Chapman would call it, a trapdoor selling. S&P's down for 6 days, 200 S&P points. Okay, so I'm assuming that marks a change of trend for a while. And, of course, that assumption could be right, could be wrong. We don't know.
Sure.
But let us assume it's correct. And take a look at what's just happened through right this minute.
Yep.
Beginning 2:30 on Thursday afternoon. You know, we're up over 100 points.
Right.
Now, my question is, or my observation is that, you know, human nature being what it is, when we all look at 100 points up in a day and a half, you must say, oh, well, this is good news. You know, as much as it is up so quickly, we've just got to have more to come. Now, you and I, as traders, have seen many times in the past where rallies in declining trends oftentimes are flashes in the pan. What I wanted to, so having said those two things, can you take a look at what we see here and describe to me why this day-and-a-half rally up to these levels here could be just about it as far as price is concerned, if not time?
Yeah, I agree, John. I mean, you know, and the main reason I agree is this, that I think we're in a downtrend because, well, first off, those high volume lows haven't got tested. If we look at the oil market, if you look at the financials, they get some high volume lows. They actually broke the June lows, which is a big heads up in general. Now, when we look at the S&P, this is a nice bounce. And because of the way, okay, this is why I don't think that we're going basically, you know, yeah, we could get to the 2940 probably, okay, those are the tops of it, but it's almost like that's, what happens, folks, is this. That's almost too easy because that's your swing point up there, so it would make sense. Oh, we're going to get up there, we've got to test it, right? Well, let's say, guess what? That, because of last Wednesday, that, to me, was that the selling, and if you're going down, what happens is that your surprises are always on the selling side. If you're going up, your surprises are on the upside. And that sell there was in the middle of the night. That started in the middle of the night, and it wasn't like there was a huge amount of news, okay? So that was, to me, that was money managers that were saying, okay, man, I'm going to bail out when Europe's opened, and there are our own managers here bailing out. Maybe they just went, you know, they just sold the futures, then they sold their stock the next day when we opened. And that's telling me that, you know, this is the area right in here, you know? I mean, if Powell, and I haven't decided yet, but I'm so close to selling this market. I sold it Friday, got stopped out quick, couple points. It was nothing because it popped. But I'm so close right now, and it really just, the Powell deal, I'm trying to figure out, the people already know, and does the market know that, okay, he's going to be out there, he's going to be talking the quarter point. I don't think the door's going to be open to a half a point, but that's what the market's going to be looking for, of course. And then I like the idea that this morning what happened is that the Huawei deal got out of the way for a bit. So they gave Huawei an extension of 90 days. So that's one pop that's out of the way. And that's the S&P's turned around and popped an additional 6 points this morning. So I kind of think that we're like right there. And I don't think the volatility's here, there's no doubt. And I just don't see anything that's going to sustain more buying. And the note and bond market is basically screaming. You know, in fact, this was a trip, folks, okay? So picture this. I wish sometimes that some of these, I guess it's really hard if you're not in the marketplace, and you're interviewing an economist, and the economist in this case was Peter Navarro. And over the weekend, folks, if this happened, now this is a fact. Now this was so wild. I was watching this, I'm saying to myself, oh, please, I wanted to scream into the guy's ear. Navarro was saying that technically the curve between the 2 and the 10-year did not invert. That's an absolute lie, folks. It inverted. I can show you it inverted. I was watching it intraday. It inverted. And what that means is this. All it means is this, is that the 10-year was paying more interest. 10-year treasury, they mean the 2-year was paying more interest on Thursday than the 10-year was paying, okay? And it was real. It was like, okay, here it is. And I'm listening to this. and I'm saying to myself, this is unbelievable. So my point on the inversion, you know, there's a lot of speculation. If you get an inversion, it's a, you know, recession 18 months later. It doesn't have to be. I'm not, you know, it can and it can't. My point is that when bonds and notes continue to want lower price, higher price, lower yield, you know, we get a correction coming, man. You know what I mean? That's my take on it, John. So, and
Tommy, thanks so much. Just as I close and leave, after thanking you here, I just will remark for you and your listeners the discovery Steve Rhodes made back in 2013 and 14, namely the utility of recording the price of the ES Mini at perigee and apogee, and that number got a new number as of Sunday at 6 p.m.
Okay.
That number is 28.93. So I'll just share with you. For me, if we get under 28.93, I'll be pressing the short side more than I am already. So
cool, man.
Just so we all can monitor that together.
I like it. Thanks, brother.
So much.
Have a great one, man. Have a safe one. 877-927-6648. Anyway, the bottom line is, folks, is that the inversion of the curve does make a difference. And I'll start bringing this up more so you can actually see how this works, because I can just bring it up. So when you take a look at this, what you do is that here, there's the curve pricing. So I put the curve on there. And what you'll see right now, the 2-year is 1.517. The 10-year is 1.596. So you can see at this particular point, they are not inverted. On last Thursday, as I bring this up, you'll see that they were inverted. And what that means is that the people would basically take less for a 10-year than they would for a 2-year. They're looking for more money for a 2-year than a 10-year. And the theory is that if that happens, why that going forward, you're going to come into some kind of recession. Now, something to keep your head wrapped around also is this, is that the recession aspect, and we're not talking a depression in 2007, 2008. You're talking a recession. Now, recessions can come in for a quarter, come in for a couple quarters, come in for a year and a half. They can be a contraction of 1%, 2%, 3%. They don't have to be a contraction of a huge amount. But what would happen, of course, is that you'd have our large multinationals not make as much money, and I would say that equities could pull back. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go take a look at some of the higher volume equities out here. This will be a low volume market out here today. You got NVIDIA's up $8. You got Apple up $5. You got, let's see, Macy's is up 20 cents. Transocean, that's got a little bounce out here. That's up 44 cents this morning. If we go over to Apple, take a look at Apple. You had, over the weekend, Trump had dinner with Tim Cook. Apple right now, that's coming into its highs, and you got a contraction of volume. So they, let's see, there it is. So let's see, President Donald Trump said Apple Chief Executive Officer voiced concerns about chief competitor Samsung Electronics getting an edge because its products, unlike Apple's, won't be subject to tariffs when imported into the United States. Cook and Trump had dinner on Friday night while the president was at his golf club in Bedminster, New Jersey. Trump described the conversation to reporters as he prepared to travel back to D.C. The majority of Apple's products are due to be hit with 10% tax in the next weeks or months. Levies on the iPhone, iPad, Apple laptops have been pushed back to December 15th. Trump said Cook made a good case about the difficulty in competing with Samsung if Apple products are subject to import tax. I thought he made a very compelling argument. Apple will be hit with tariffs because it makes the majority of its devices in China before importing them back into the U.S. and other parts of the world. Samsung, however, builds its products across several countries, including Vietnam and South Korea, in addition to China. It's tough for Apple to pay tariffs if it's competing with a very good company. That's not good, Trump said. Apple needs to incorporate the cost of tariffs into the cost of products, while Samsung currently won't, putting Apple at a competitive disadvantage. Samsung is launching its latest device, the Note 10, later this month, while Apple is planning upgrades to the Apple Watch, iPhone, and computers later this year. So we'll see how that baby's going to shake out. But there's no doubt there's a huge amount of moving parts inside anything and everything that manufacturers are coming out of China versus where the rest of it's going to basically be manufactured or get manufactured, all of the above. We got to take a look at, let's go see how good old Bitcoin's going. So Bitcoin out here, let's see, XBT. It looks like been in this consolidation for a while now. The bottom of this consolidation since June has been the 9,100 mark. 13,800 is the higher mark. You got down to 94.92 last week, and right now you're laying out here at 10,716. So it's been pretty orderly, actually. Inside of that market. The NVDA, let's go take a look at NVIDIA. NVIDIA had got a pop on the last 3 days. In fact, NVIDIA just went from 147 to 168. There's no reason it can't get to 173. Right now you're at 168.14. Now, I was talking a little bit about it when I had John from Philly on. I was talking about the oil and how that basically broke down in the XLE. So what we have is this. XLE is up a buck. Now, the XLE is down from $68.81. You're at 58. And the XLE, we put this up, what you're going to see is one of the first sectors to, first off, break its June swing low, which is 58.77, and go after the low of 58.36. So I expect we're going to go right after it. Why? Because what you also had out here is that you broke, and you broke with some good volume. We broke with 107 million shares versus 66 on a weekly basis. The next one that you want to get your head wrapped around is the XLF. The XLF, that came down to its June low last week. We broke that with volume. That number that we're talking about is 25.92. You got down to 25.91. That's pretty wild. Yeah, 25.91. You're bouncing with light volume. We put this back, and I suspect it just looks like we're building cause to basically try to get down into these lows that were established out here in December. So, you know, you get a couple big sectors like that are moving south like that. It's not going to be, it doesn't take much more selling, let's put it that way, to get down into those lower numbers. We go take a look at Walmart. Walmart, of course, hit an all-time high last week. And, well, no, it didn't hit an all-time high. It went high. The all-time high right now is 115.49, and we're at 114.59. Now, I expect we're going to probably get into that number, at least test that number, you know, because that was a monster bar out here last week. We went from 104 to 114, big number. Amazon, we take a look at a couple of the FANG stocks. Amazon not getting any traction. It's down from 2035. You're at 1816. You got into the June levels, which is 1766. We got to 1748. That's telling me that it still wants to go lower. Google, same type of setup in Google. You know, Google's down from this 1289, you're 1198. And Netflix. So let's go look at Microsoft, because Microsoft still, the cool thing about looking at Microsoft, folks, is that Microsoft has been one of the strongest equities inside the market in general. Inside the NDX 100 and then composite is the strongest equity. That being said, now we've been consolidating its highs here since June. 137.64 it's at. You know, nice setup, but the bottom line is that if Microsoft can't get up and over its highs, you know, that says quite a bit, because you get the strongest stock out there that can't. Netflix wants lower price. Netflix is down from 385, you're 306. This baby here, yeah, it's making its way into the December lows, 231. 261's the high, 231's the low. We hit 288 last week. So this, and that Netflix is actually, the all-time high is 423. What a consolidation this is. But actually, when you look at this, you know, it'll take a lot for Netflix to break down into that 256 area. But what you have there, it's game. Tesla, we go take a look at Tesla out here. Oops. Tesla's laying out at 224. You're up $4.50 today. Yeah, this is in sad shape. This is down from 379. This will take a while to get lower, but the bottom line, Tesla looks like it does want to go after 211 once again. They're at 224 right now. So they still have their challenges ahead of them getting into heavy-duty profitability. There's no two ways about that. Let's go back to the bond market for a second, because it looks to me like these bonds out here just are not going to stay at a lower price out here today. In fact, let's do the TLT first, because you'll see with the 20-year ETF structure, that also hit all-time highs last week. You got over the swing point. We hit 148.60. The swing point was 143.60. We've already done 221 million shares versus 182. So the 20-year plus is saying that that can actually go to now, let's see. Wow, 30. 173. And you're at 144. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And if you do want to see how jobs and companies can make a difference in the real estate market, folks, you got Alexandria, Virginia, as well as Arlington, Virginia. Amazon is making one of their headquarters there. This is quite a number, too. Listen to this number. So homes that sold last month were on the market for 11 days in Arlington and 14 days in Alexandria, okay? This is like pretty amazing. That compares to 27 days in Washington, D.C., which is a hot market, also compared to 38 days nationally. So here's the numbers, too. This is pretty wild. So the median price right now in Arlington is $616,000. Homes that they put out there and they got a bidding war on, 46% of them. Year-over-year inventory is down 57%, 51%. On market 11 days. Alexandria, median price is $490. Homes above the listing price, 36%. Inventory is down 47%. Days on market, 14. Nationally, what you have is that you have, it's pretty impressive actually, nationally, homes sold above asking prices, 24%. Nationally, it's 318,000 median price. Homes above asking, 24%. It's pretty good. Inventory change, though, only minus 3%. Days on market at 38. So, and that's good old Amazon coming into the city, and why? Because guess what? The average pay of when those offices coming in, the office part of it, is $150,000 a pop. So you're talking about big numbers. Stay right there, folks. We got Fast Market coming up next, and we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Have a great one, folks. Have a safe one. Dow Industrials up 256. NASDAQ up 106. S&P's up 31. Stay right there. TD Ameritrade, come right up.